up, homies? Welcome back to Investing with Homies, coming at you today on December 13th, Market Monday. Welcome to the chat and anyone tuning in to this video on replay or on YouTube. Hope you guys are well. My name's Curtis and I'm joined with the homie Lawrence. What's up, homie?
Yo, I'm not keeping that background.
Hell yeah, homie. I feel it. No, that background is sick, dude. It's the Christmas spirit, right? Damn, I should change my background too. I'll show you guys background. No, actually, I'll save it for later though. I can change my background. Actually, I can't change it because I'm streaming on a different screen. In Discord, I can change. Anyways, welcome to the show today, guys. We are going to be covering last week's update on the CPI data. We're going to be talking about what's anticipated for the Fed meeting over the next 2 days, why the market is essentially red today, and going into a couple other random topics, covering the Fear and Greed Index. Lawrence is going to go into some detail about CPI data, like comparing it to, because a lot of people are comparing it to the data from, like decades ago. But, we're measuring CPI off different indices, so we'll talk about that. Expectations with inflation, how that's all shaping up, because inflation is one of the biggest impactors of the economy at the current moment. And at the very end of the stream, we're going to also do some technical analysis on a handful of stocks and also a couple cryptos for you guys. As always, if you have questions, feel free to leave them in the chat. And Lawrence, anything you want to say to the homies before we get going?
What's up, homies?
Yeah, what's up, homies? All right, so let's just pull up first for you guys. Let's just get into, there's my account for today. As you guys know, Tesla is down. Thank you, Elon Musk, for selling some of those shares. Tesla under 1,000 again. You guys don't sleep on it if you're not in Tesla yet. Always a good
He's
buy,
trying to buy Bitcoin.
in my opinion. Is that why he sold? He wants to buy Bitcoin.
I don't know.
He says he
Oh,
exercised
maybe
options.
Doge.
He's options to buy 2.13 million shares of Tesla also. So he's selling and buying at the same time. So keep that in mind, homies.
I think Elon tweeted like that, like something about like Doge is still like, um, I don't know. He said something about Doge recently again. I don't know I forgot what it was, but something about Doge is still still has
Relevant.
better, like more transactions or something than Bitcoin. I don't know. I thought it was funny. I was just
Yeah,
like, geez.
Elon Musk definitely is the momentum mover. He definitely, when Tesla's one of those stocks that can be very volatile, up and down, especially when anyone gets some sort of like even the smallest negative catalyst, could potentially send the stock into a frenzy. But for me, a long-term bull on Tesla, any downturn is a good time to start dollar cost averaging, guys. So don't forget about that. Taking a quick look at all the indices, the Dow, the Nasdaq, the S&P are all super down today. Taking a look at the FinViz heat map, you can see pretty much all the stocks got hit hard today. We can see Facebook is actually up 1.4% though. Healthcare sector did extremely well today, and it looks like the beverages and non-alcoholic sector is doing fairly well today as well. Maybe it's all those sales with the rise in inflation in the products. Who knows? But let's keep it going, you guys. Let's get into the overall summary for today's market. What exactly is going on? Why the market's red today? And let's get into it. So Wall Street ended lower on Monday with shares of Carnival Cruise Line and several airlines tumbling as investors worried about the Omicron coronavirus variant ahead of the Federal Reserve meeting later this week. So we've been saying over the last week or so that I'm using travel stocks as like an indicator of consumer and sentiment. So basically, if travel stocks are going up, people are pretty optimistic about the economy, about coronavirus going away and that sort of thing. If travel stocks are going down, it's showing us that a lot of people are starting to get a little bit worried or maybe uncertain of where we're headed exactly. Is travel going to be restricted again, and all that sort of thing. So we can see travel related stocks fell with the fast spreading variant accounting for around 40% of COVID-19 infections in London and at least one death in the United Kingdom. So one person has died from this new variant and it's making a lot of news, right? Keep in mind, you guys, try to have a realistic mentality. Flus do kill a lot of people every year, even the common cold. So one death is obviously horrible, but still, it's not going to send the economy into a complete shutdown just from that. But it's just the news pumping it up. People, getting fearful of that. Obviously there probably will be more deaths, but we'll have to see and wait, and we'll see how these vaccines are doing, right? See how because because all the Pfizer and Moderna, all those stocks are doing very well today on some positive news the other day, right? I believe they reported. I think it was Pfizer. Do you know this, Lawrence? The Pfizer announced that they had some sort of new vaccine that they're going to release in a month or two. That's supposed to be for the Omicron, and that's actually what was some positive sentiment in the market last week. So it's funny if how it flipped over
Booster
the
or something?
weekend. What was that?
Oh, sorry, like a booster or something, maybe?
Yeah, exactly. And so like that positive sentiment was from last week, and it's just funny how Monday here we are and the sentiment has flipped. One person has died, and the whole sentiment has now flipped. But it's also controlled a little bit by the media, in my opinion. Anyways, Norwegian Cruise Lines holding Carnival, Royal Caribbean, airlines, they all fell more than 4%. And the index, S&P airline index fell about 3%. Transportation, restaurants, all things that if it got bad enough, we started putting new restrictions. And so that's the worry. If we get bad enough with the COVID, we'll get into the lockdown territory, into the travel restrictions again. And that's going to hurt the economy most of all. They all have to. This guy's saying they have all been bid over the past several months by the idea that we're going back to business as usual. That is a little bit true. Travel has had a nice little recovery, but I mean, let's just take a look at like my favorite. You could say it's like it's related to travel, right? So over the last 3 months, it's still down 18%. Over the last year, it's down 13%. Let's look at CCL, Carnival, one of the travel stocks they're talking about. Still down over the last year, still down over the last 3 months. So when he's saying that travel had a recovery, it's literally just, a month or so of recovery. So down 23, 27%. And they recovered about almost half of that. And, now they're back on the decline. So it was kind of a short-lived recovery, if anything. And so in a stable economy, this recovery should be more drawn out, in my opinion, like a bullish recovery for travel. But let's keep it going. So most of the 11 major S&P 500 sector indexes fell, with only defensive sectors, including consumer staples, utilities, and real estate, gaining. Apple dipped 2.1%, even after JP Morgan raised its price target on the iPhone maker to the highest on Wall Street. The company is close to becoming the first in the world to hit $3 trillion in market value, that is crazy, huh? Apple hit 3 trillion in market value. I remember just like 2 or 3 years ago, Apple hit 1 trillion and people were freaking out, and now they're going to hit 3 trillion in like just a few years. Here they are.
I think it was like
Yep.
all-time highs today.
Let's take a look. So their market cap, according to Robinhood, sitting at 2.8 trillion. They're getting very close. You said all-time highs today, so what, like around 181?
Like 188. I thought I vaguely saw
Yeah,
this morning.
we can look at it on TradingView a little bit later. But yeah, so I mean, even according to Robinhood, if 181 was the all-time high today, then yeah, it was at all-time highs. So all-time highs,
182, yeah.
all-time highs to a nice little drop, and it's all the way back down to 175. Nice, pretty nice. Apple is one of those juggernaut stocks that everyone, I think, should have a little bit of Apple in their portfolio just for the long-term aspect. Apple even pays a solid little dividend, so it's pretty much a must-have dividend play stock. Obviously, you never want to buy in at the all-time highs or at the very top, but with a stock like this, you could miss out on crazy good gains if you never decide to hop in. So it's just good to dollar cost average into a stock like Apple. Big news though, if it's hitting $3 trillion market cap, could see some more momentum, more trade, more retail come into the stock to play it off of that hype news. So we'll have to see. So let's talk a little bit about the Fed. The Fed meeting again is happening tomorrow, and then the next day, the 2-day meeting. Investors expect an increasingly hawkish tone out of the Federal Reserve. 2-day meeting that wraps up on Wednesday. The U.S. Central Bank is expected to signal a faster wind down of asset purchases, which could also usher closer to a start to interest rate hikes. Everyone is focused on the Fed this week and what guidance we get in terms of bond purchases and interest rates. There's an expectation that there will be an acceleration of tapering and that there will be a little anxiety leading up to that. So last week on the 9th, we did see like a green day in the market. No, I'm sorry. We saw a red day in the market leading up to the CPI index release over inflation. Overall, the inflation numbers, we're going to cover it a little bit deeper, but just summary really quick. Inflation numbers came out fairly neutral. And so the day of the meeting, when the numbers came out, the market was green. But the day before, with the uncertainty and the fear, uh, the market was red. And we're kind of seeing that today with the Fed, because the Fed meeting is happening tomorrow and the next day. So we're seeing a little bit of a uncertainty lead up into this, a little bit of a sell off before the actual meeting happens. But maybe we'll see a recovery while the meeting goes off, and regardless of what they say, because we did talk about last week, sometimes good news can be seen as bad news, and bad news can be seen as good news. It depends on the vast majority of, I guess you could say, retail investors and also majority institution investors, how they react to what the Fed does eventually say. So, positive updates about the or I'm sorry, I think I skipped something. Oh, I'm sorry. So the poll economist sees the central bank hiking interest rates from a near zero to 0.25% or 0.50% in the third quarter of next year, followed by another in the fourth quarter. So some positive updates. This is what I was talking about with the vaccines for this new variant we have. So positive updates about vaccines, antibody cocktails to combat the new COVID-19 variant, along with a recent reading on inflation that was in the line of consensus, pushed the S&P index to a record closing high last Friday. Pfizer Inc. rose 4.6% after it agreed to acquire Arena Pharmaceuticals in a $6.7 billion cash deal. And their stock went up 80% today, you guys. So that's one that we can take a look at in a little bit here. Let's actually look at it really quick. So ARNA up 80%. You ever get into any of the pharmaceutical stocks, Lawrence?
I thought about it, but I ended up like kind of backing off of them because I just wasn't really willing to do the research and take the time to like read through and do the due diligence of like understanding these companies like inside out basically, like cuz I feel like that's where you're going to get the most bang for your buck. They generally do seem to like run in cycles or like chop sideways over long periods of time, like big upswings, big downswings, and it's all
Yeah.
based on the sentiment of these like, scientific articles, the research they release, is it really peer reviewed or not? What's
I
the depth of
remember
all that? But
I
yeah.
remember during like the start of the COVID pandemic, looking at the vaccine stocks like Pfizer, Moderna, just thinking that they were super shady, and just kind of thinking that like their stock price ran up crazy already during the very beginning of the pandemic, and I assumed that once they finally made the sales on the vaccines themselves, the stock price valuation would be overvalued in comparison to how much they've sold by then. You know what I mean? It was like a hype. It went up before they even made sales on the vaccine. Before it went up before they even made a vaccine. So I was always like skeptical of the actual stock, and it's just crazy to see them still continue to grow to this day. They've made insane gains since over the last 2 years, pretty much all of them, like Pfizer and Moderna mainly, and yeah, it's kind of crazy. Like I think Moderna is starting to be more seen as like modern medicine type of stock, where they're like going into all kinds of different uh, I'm not super, I don't know everything about Moderna, but like they're just making a bunch of different types of medicines for all kinds of different things now with the mRNA technology, I think is what they call it. Um, so there's some like actual fundamental credibility that's kind of like, oh, this could be a good stock, but now it's so overvalued. It's like, I don't want to buy it. It's so high up there, right? But if we stay in a pandemic for 5 more years, probably will go up. You know what I mean? But let's hope that doesn't happen.
Yeah, that's a really good point. I think like it does make sense. Like they mRNA vectors are kind of like a new thing lately where like for example like with the COVID vaccine, like instead of having to introduce the entire virus to the body, you only really need like a specific strand of DNA in the form of RNA, and that's enough to actually like tell the body like, hey, it's this specific piece that you're looking for that kind of is related to this whole host of other things in concert that helps the body identify, oh, that's the virus that we're trying to like get rid of. Basically, it's kind of weird, crazy stuff, but it's like simplified and less risks supposedly involved in terms of like introducing like the thought of introducing the virus versus introducing a strand of mRNA, messenger RNA to the body.
Yeah.
But yeah, it's pretty cool. It's definitely like the future, I think, and we're like heading in the right directions with all that. But yeah, I it's hard for me to I haven't been my interest hasn't taken me there to keep up on all that stuff, but it's definitely really
Yeah.
cool.
Yeah, I chose for my like pharmaceutical play. I just invested into CVS pharmacies because they were giving out the booster shots, and I just did the simplistic observation that if more traffic's going into the store to get vaccines, then they'll make more sales on their general product. And it's a dividend paying stock, and it's fairly it was fairly undervalued too over the last year or two. And I'm up on Walgreens today, so that's my one play into it. But yeah, like it's very like I just looked at the pharmaceutical stocks as there's so much competition, as well, and just uncertainty too. But yeah, congrats to anyone who invested in ARNA because you guys look at that. They were at $50 the other day. They literally like doubled in price up to $90, and the stock's been on a downward trend actually for a minute now. So congrats to any homies that got into that one. Get back to the article. And if you guys are just tuning in, feel free to leave some questions. If you guys have any stocks you guys want us to review or cryptos, we'll be happy to do so for you guys. All right, so that's the end of this article. So S&P 500 posted 52 new week high, 52 new week highs, and 4 new lows. And the Nasdaq Composite recorded 33 new highs and 302 new lows. Okay, let's get over to really quick last week what happened with the CPI data, and we'll also give Lawrence a chance to give us a little insight into it. And again, just kind of reiterating the point, tomorrow's the Fed meeting, and we're in a red day today. Last week we had a red day right before CPI data came out, and like the thing that can cause red days is uncertainty, because people in their minds tend to make bad things seem worse than they actually are. And once you actually get clarification to how bad it is, then the fear starts to go away, and you realize, oh, it's not as bad as I thought. And so that's kind of what happens a lot the day before these meetings and sort of thing. So that's just explaining today's like nice little red day. So let's get over the CPI information that came out last week. Inflation accelerated at its fastest pace since 1982 in November. The Labor Department said Friday, putting pressure on the economic recovery and raising the stakes for the Federal Reserve. Lawrence, feel free to cut me off too. I'll give you a chance here, but just let me know if you have something you want to say. Price increases came from familiar culprits, so energy prices have risen 33.3% since November of 2020, including a 3.5 surge in November. Gasoline alone is up 58.1%. Food prices have jumped 6.1% over the year, while used car and truck prices, a major contributor to inflation burst, are up 31.4%, following a 2.5% increase in the last month. One thing to keep in mind that I'm observing with the used car and truck prices being a significant impact into our inflation is the fact that not everyone is buying a used car. It's not like food, how food is a necessity and we have to like purchase it every day, right? We're buying not everyone's buying used cars. Do you know, Lawrence, how much the used car market's impacting inflation? Have you heard about that? I feel like it's been somewhat impactful, right? Oh shoot, I think we lost Lawrence, homies. Lawrence is like frozen. Lawrence, you there, homie? Alright, Lawrence is having some technical difficulties. Let me know when you get back, homie. Alright, but anyways, yeah, so keep that in mind. Used car prices aren't really that big of an impactor. I feel like it's kind of like skewing inflation a little bit, if that is like a big, indicator for it. Because not everyone's, buying used cars. The Labor Department said the increase for food and energy components were the fastest 12-month gains in the last 13 years. Shelter costs, which comprise about 1/3 of the CPI, increased 3.8% on the year, the highest since 2007. Markets reacted positively to the report, though, with stock indexes on Wall Street rising while government bond yields moved lower. This was mainly because the year-over-year expected numbers for inflation was about 6.7%, and we only went over it and came in at 6.8%. So we basically hit expectations. We didn't go over it extremely and freak everyone out. But again, imagine if used cars weren't as more as an important indicator, maybe we'd have hit expectations or even been a little bit lower. Who knows? Fed officials have attributed inflation jump to factors associated with the pandemic, obviously. Strong consumer demand for goods and supply chain bottlenecks have been a major factor as well, though the price increases have been stronger and more persistent than policymakers had anticipated. So it says here, there's no question, no matter how you look at it, even if you take out the extremes caused by the pandemic, it's still very high inflation. This is still supply chain disruption, and they're calling it semiconductor related inflation. So investors widely expect the Fed to double the tapering of its asset purchases to 30 billion. So this is what is expected to come out tomorrow on the Fed meeting. We're expecting them to double its asset purchases to 30 billion a month, coming from 15 billion, and it's likely to start in January. And this would enable the Fed to start raising interest rates as soon as next spring. They're going to start printing less money now. That's essentially what they're saying. Though gross pay has increased 4.8%, this is important too, guys. Gross pay has increased 4.8% over the past year. The real average hourly earnings accounting for inflation declined over 0.4% for November and are down 1.9% for the 12-month period, of Labor Department said in a separate release. So that just means even though wages are going up, inflation's going up too, and the disparity between wages and inflation is still causing wages to be too low, essentially. So that's not good. Service costs rose 0.4% in November and are up 3.4% for the month. Apparel costs are higher for the month, rising 1.3% and 5% for the year ahead of holiday shopping season. Some economists, however, think inflation is near its peak, particularly with energy prices declining in the recent weeks, while West Texas Intermediate oil is up more than 52% in 2021. The price has come down about 14% from its recent peak in November. So are we getting to a peak in this inflation? We'll have to see what the Fed says tomorrow. I think if they start raising rates, that's going to be a sign that we're getting closer to the end of inflation. And finally, with unemployment claims running at their lowest pace since 1969 and gross domestic product expected to show strong gains to the end of 2021 after a lackluster third quarter, inflation remains the biggest problem for the recovery. And everyone's blaming Joe Biden. That's what it says at the end. Anyways, let's keep it going, homie. So guys, let me just take a swig. Lawrence, are you back, homie?
Yes, sir.
Oh, there he is. I think you froze for a sec, my dude.
Yeah, my internet got cut out, but I'm back now, so I'm glad I could catch a little bit of that article. That was a interesting one. They had some stuff in there that I definitely have thoughts about. Like, for example, like they said it was a semiconductor related inflation, but I think we all know that the supply chain issues aren't just related to semiconductors alone. So you also have like cargo ships that come from China across the
Yeah,
Pacific
that's the supply chain issues, essentially,
lined
right?
up lined up for miles in the ocean because they're waiting to get onto the port to unload all their goods, and then where they put those empty cargoes, they don't have any place to put them anymore because there's some places in these areas where you can only stack the boxes too high. You can
Mm-hmm.
only do two. You can't do like more than five or whatever in certain areas. So like that's stopping. And then there's also a lot of warehouse space issues. There's a lack of truckers across the US, and that kind of makes sense because my speculation is that when you have the truckers of the US basically, a large majority of them are from the Midwest, and the Midwest is where a lot of our manufacturing base got decimated basically, and it's in the Midwest and the more eastern states. It's hard for us to feel it in California because when you look at people who are benefiting from unemployment and then you have a $600 bonus on top of that earlier this year and last year in 2020, that's a huge paycheck. That's like almost half, if not all, of the monthly rent for a lot of people in the mid to east coast. Um, Mid to east states, of the US. And then so that's why there was such a big incentive for a majority of people in the US that we probably as Californians weren't realizing. because to live in California, it is a lot more expensive because we
Yeah.
have all these benefits of being on the coast and a lot of the tech industries that exist along the coast here.
Yeah, I think everyone agrees it's not definitely one thing that's causing inflation, that's for sure. It's a mixture of a lot of different things. I think that guy's just saying his opinion is that that's his thought is that that's the main thing is the semiconductor thing. I mean, I don't have an opinion really if one's more important than the other. I think the semiconductors, the supply chains, the unemployment, the pandemic, travel being shut down, printing a lot of money. I think all those things have led to kind of where we're at today with inflation, most likely. Maybe some other things I missed as well. And then I was asking you right before you cut out too, because they were talking about how we barely went above what was expected with the CPI numbers last week. And you're saying how back in the 80s or whatever we measured CPI off certain certain indices, right? Like how we measure it today is off food and used car sales and all kinds of different things, right? They were contributing used car sales to a big portion of inflation, and because used car sales I think went up like 30% or something crazy like that. And my point is just that not everyone buys a used car, so it's not as relevant. It's not as important as say comparing it to something like food or maybe housing, because everyone needs food, everyone needs a home. But yeah, so what was your thoughts so that we can get past the CPI, Lawrence? Because I know you wanted to share some
Oh
sort
yeah.
of disparity between now and the past CPI reports. And I have this chart that you wanted me to pull up to the consumer price index right here.
Yeah, so like just to before I start real quick is like something interesting was that, the semiconductor shortage is making it so that, all these car factories have a whole bunch of cars waiting for semiconductors to be put into the cars. So now there's less incentive for them to make more cars because they're just waiting for these semiconductors right now. So what has actually happened to the price of palladium, when you look at the price of palladium right now, it's gone down from $3,000 down to $1,700 per ounce, I think it is.
Mm-hmm.
So that's kind of interesting to see how maybe that in the future will play out because that is going to make car production a lot cheaper for future cars that will be made, maybe, for the cars that need palladium. Um, but anyways, so basically, today's CPI is not measured the same as it was in the 1970s. And right now, we have a host of people comparing today's numbers to the 1970s because the 1970s was considered the Great Inflation. Um, I don't know a lot about that, but I just kind of wanted to touch on some of the stuff that I was just hearing from Peter Schiff's podcast, basically. That I think, was valuable for almost anybody to hear really. So what was going on is that there's like a few things that are different about the way we measure CPI today compared to back then. The main thing is that today we use something called homeowners equivalent rent, whereas back then we actually used the cost of home prices and we used the cost of rent in the CPI. That was all factored in, but today we don't even factor in home prices or rent prices. So if you look at home prices on the year, they've gone up 20%. If you look at rent prices, they've gone up somewhere around 17%. But if you look at homeowners equivalent rent, which is the thing that we're using in the CPI today, not home prices, not rent prices, homeowners equivalent rent has gone up 3.5% versus the 20 and 17% for home and rent prices.
And you
That's like
think
crazy.
so? You're saying actual homeowner rent is measured and it went up like around 20%. You said, right? And then
House prices,
house
yes.
prices went up 20%, and then you're saying the homeowner rent equivalent, which is essentially like the renters making up a number, is only they're saying it only went up about 3.5%, right?
Yeah, yeah. So homeowners equivalent rent is this survey that the government sends out to homeowners saying like, "Hey, if you were to rent this room out or you were to rent your house out, how much do you think you would rent it out for?" And then they
Hmm.
just give you a roundabout guess, which is it's like the whole argument there is like, why don't you just use the actual rent prices that people are paying across the world? Why are we using this metric that is based off of an approximation by the owner of the house, somebody who's not even paying the rent? It's just ridiculous,
I
right?
feel like
So
homeowners would if anything raise the price of the just so that they could, you know, homeowner will want to get the most amount of rent possible, right? So they're gonna think that their house is worth a lot. So wouldn't they like? Do you think they would want to raise it? Or
I
maybe they're
think
just
uh,
uneducated and they don't raise it.
I
Who
think what
knows?
tends to happen is that most people just don't understand the full value of their house. You know, for example, like when you first bought your house, you bought it at a specific price. So, you know, you buy a house that was once $100,000 and it's worth 500,000 today. A lot of people don't understand like how to approximate a valid or, you know, accurate
I think
rental, you know, representation.
yeah, I'm going against myself now. I think it does make more sense for the rent to be lower than the actual house increase. Because you know renters can only pay so much for rent. You know what I mean? Even if the homeowner's house goes up like 50% in value in 2 years, that doesn't mean the renter's gonna have to pay 50% more for rent. You know what I mean? Renters
Yeah,
rent
yeah.
rent will go up with the housing market, but not probably as fast. I don't know. Maybe that's why they're using it. Because if we were
Well,
basing off housing,
so
we would be way higher, right?
I
Like
mean, I
what you
guess
did in the
just
past, right?
to just jump the gun, the funny thing is actually just to let the cat out of the bag is that basically every year the government has to raise Social Security payments in relationship to the CPI. So when you have such crazy numbers occurring in the housing markets, to use a different metric, we can keep the CPI lower, and now
Yeah.
we're giving ourselves the ability to not have to pay Social Security in relationship to inflation as high as it otherwise would be if we included house prices and rent prices. So it's like a way for the government to keep the numbers lower because in reality we cannot afford that.
For
The
yeah,
reality it's insane.
that makes sense. Yeah, because like we're saying, like housing went up 20+% I think over the last year, and
Yeah,
so
and
it's
then
like
those
if we
numbers
added that to
alone.
CPI, then inflation would be like 10% plus rather than 6.8 where we're at right now.
Yeah, so if you actually so yeah, if you look at today's numbers, 6.8% on the year, where we were at in on that Fred website, it says, you know, if you go to the edit the graph
Oh yeah,
and you you're already on it. So go to the units at the top there on the right, um
format
units and then change it to yeah, change from a year ago index 1982 to 1984. So you're on the right one.
1982, 1984.
Or exit out of that?
I got it. We're on
You're
the right.
already on it, you're
Yeah,
already on
we're
it.
on the right one, homie.
So just exit out of it because it's covering.
Okay.
Yeah.
Wait, I'm sorry. Hold on.
So now you just gotta zoom out of that though. I would just refresh the page
Here we go. Or wait.
because you accidentally zoomed in. So yeah, now go to edit graph. So that's where we're what the numbers today, and then you can change it. So now you can see like that giant spike that we have now. If you measured CPI today in 1980s terms, we're at around 17% um inflation. Um
That's interesting.
and then you can go back to the 1980s, which is actually the peak of the great inflation of the 70s. It's actually the peak was in the 80s. So it's right there on the graph. We're at about 10% there. It was actually about 11%. And so a lot of people are saying today is not as bad as the great inflation of the 1970s. And I just want to point that out to people. Like there's a lot of things that we don't factor in the CPI today that we did factor in back then. So if you were to measure it in those terms, we see here on this graph that
Yeah, this is
it's actually worse.
yeah. If we were measuring it in those terms from the 80s or whatever, but totally interesting point though. It just shows kind of how our economy is evolving and changing based off different laws or different whatever policies they decide changing CPI indices and that sort of thing, right? It's interesting. Yeah, that's
Uh,
all I can really say. You know, they must have had an issue back in this time period, and they saw probably housing go up. I'm assuming, and you know maybe they're like, all right, we need to solve this problem so this doesn't happen again. Um, and so now they're
yeah.
basing it off other things, and like I'm sure like this whole pandemic, like this pandemic, honestly could have turned into like the Great Depression type scenario. You know what I mean? Like something ridiculous, but the Fed and the government found a way to stall and just keep things afloat by printing money and other things, right?
I
um
think like a lot of it too is just political. So like no politician wants to tell the voters that, hey, we got to lower we're trying to suppress
yeah,
our,
it's
so
just
we
different
can't afford Social
times.
Security. Like when a
It's
politician says that you can't afford Social Security, nobody's going to want to hear that. Like they're not going to vote for you. So they have to alter the statistics to fit their narrative to make people believe that
and
their
I think
side is the better one. So,
I agree
yeah.
with that for sure. Definitely politically motivated. This whole world's all political now. But and we're just living in different times too, man. Like I feel like America going through a Great Depression and that just wouldn't fly with like the American people in today's modern society, whereas like back in the 1920s when the Great Depression happened, it's like banks, there wasn't the internet, there wasn't phones, there wasn't like all the things that keep people connected and interlooped now. And I just don't I the government just could not afford to lose the trust of the people to that extent by bankrupting the whole entire economy. So that's like the best thing I think they've done. But at the same time, the world has changed in the last 2 years. Like it's flipped on its head when you look at it from a money and economy and world economy perspective. Like everything, no one, like 3 years ago, no one would think the world is what it is today. You know what I mean? It happened really quick, and it's continuously changing at a very quick pace. We're still going through it right now. But yeah, I really like that, Lawrence. That's really cool. Just to see, like, I love history. Like knowing all the different things, because that just means like something can change into the future. Like they can add something or they can take something away as well. And so you should always just be aware of like what has happened and how to prepare for certain events like that. Very cool stuff, homie. Um,
Totally.
so that's about it though. So we covered, the not it for the stream, but that's it for CPI and for the Fed recap. The CPI recap and the Fed update. So just a final recap: CPI numbers last week came in fairly neutral. Everything was all good. Nothing too worrisome. The market reacted in a positive way. Today we had a red day, anticipating uncertainty. Again, once you get the news, it's better than not having the actual news, and that fear starts to kind of go away once you know what the actual news is. And we'll get the news tomorrow and the next day. So we'll see. Most likely, they're going to be talking about raising tapering, expected acceleration in tapering, print less money, and that's about it, really. And it's going to be leading us to a recovering economy in hopes. Other negative catalyst, though, is that COVID variant, so we'll have to obviously keep a look at the travel stocks. So, also, last thing I want to show you guys before we get into reviewing just a couple quick stocks, I just wanted to recap the Fear and Greed Index for you guys, which we looked at last week, and exactly how they determine the Fear and Greed Index. I'm just going to go through it very quickly. So this is how they determine the Fear and Greed Index, you guys. And again, fear being when people are selling stocks, people are getting out of the market, selling out of fear, and then greed being when people are buying heavily, buying at the top. It's going to the moon. You can't help it. You just got to buy. They're getting greedy. So this is how they base the index. They just simply go over stock price momentum, the S&P 500 versus its 125-day moving average, stock price strength, the number of stocks hitting 52-week highs and or lows, stock price breadth, the volume of shares trading in stocks on the rise versus those declining, put and call options, put and call ratios, which compares the trading volume of bullish call options relative to trading volume of bearish put options. Junk bond demand, the spread between yields on investment grade bonds and junk bonds. Market volatility, the VIX, which measures volatility. And safe haven demand, the difference in returns for stocks versus treasuries. So these 1, 2, 3, 4, 5, 6, 7 things are what we do to base off the Fear and Greed Index. And for some reason, it was not showing me the Fear and Greed Index today. So we can't look at it. But I'm assuming, let's see, these are dates. Oh, December 13th. So today, we're at extreme fear right now, homies. And then, what? That doesn't make any sense. All right, we're just gonna skip past that. I'll bring it up on Wednesday again. But look up the Fear and Greed Index. It's definitely a way to determine where the market sentiment is currently at. Let me take a quick swig. What do you think about the Fear and Greed Index, L Dog? And what up, YOLOs in the chat? So what's keeping us from being in a full-blown Great Depression right now? Or is it, like you said, Kurt, oftentimes things seem a lot worse than they are? By the way, what's up, you guys? Been listening along. What's up, Carlos? I think the government would just I just imagine if we did go into a Great Depression, like we would, we saw riots, right? During the pandemic because of Black Lives Matter and like pandemic riots even too. Just imagine if like every single like 80% of the population other than the richest people, just imagine that 80% just all getting completely wrecked, into poverty. Like during the Great Depression in 1920s, I think people were like going out and just trying to get a loaf of bread to feed their family. Like if we were in that situation today in the way that the modern world is, America would be done for essentially. The people would give up. I think there would be massive riots. I think it'd be insane. It'd be like a civil war almost type of deal. That's extreme, obviously, what I'm saying, but that's why the America government did not let it happen, I think, and obviously they tried their best to avoid it. But I think what it was almost in a way that it was planned because the way that the money has moved. When I say the economy has changed, it's because the money has moved from where it was 3 years ago, and now it's in way new places. We have cryptos, we have all this innovative companies that are coming out, all these crazy growth stocks that are coming out. And money is going away from like its traditional basis into more of like tech, futuristic things. We had the Industrial Revolution, and that was like the lead up building America. And during that time, all the money was in oil. And today, I would say that a lot of that money has trickled away from oil and is into other assets and that sort of thing. So the rich, all I'm saying is the richest people in the world have basically used this time where the economy printed up 25% of the world's economy money right there, and they've been able to move money around and get money into new spots. And big money is in different places than it was 3 years ago. Um, and I think it's just like it could have been planned essentially. It could have all been like they saw this big pandemic coming and they're like, oh, this is our opportunity to print a lot of money and move the money around. Who knows? Conspiracy kinda. But I just don't think the world would collapse. Lawrence, do you want to say anything about it?
I was just gonna point. I was just pointing out, like in the chat, like you know, we've I've heard this from Emil Kalinowski, who kind of refers to this as like the silent depression since the 2008 financial crisis. We run on this system that actually is, I would arguably like differ with you on the side that our world is actually still run by oil today. So much so in the sense that in the 1970s, actually, it's kind of funny. Something about the 70s, man. We got off the gold standard in the 70s. We, had the great
Yeah.
inflation in the 70s,
Oh
and
yeah.
and but also in the
Real quick,
1970s.
world is definitely ran by oil in a sense. We still got Saudi Arabia and like all the other power players with oil for sure, no doubt. I'm just saying like starting to transition, and those oil companies are gonna still be relevant probably until we're dead. Um, it's just kind of we'll have to see where EVs and electricity goes if those oil companies invest into that. Yeah, we'll have to
But
see.
yeah, we're like
Sorry,
we're still heavily reliant on oil. So
we
yeah, like
totally are. We totally are.
the 1970s though, like we made this deal with Saudi Arabia. Supposedly, this is what I heard from Lynn Alden, was that um we told Saudi Arabia, we made the deal with them that you can only deal oil in US dollars. So what that does is it effectively creates global demand for US dollars because there's global demand for oil.
Hmm.
And the issue with that is now the US has to provide some type of liquidity to the global markets, because if the dollar is too strong, then these foreign countries are going to struggle to even make ends meet, you know, and this is where the whole issue with interest rates actually comes in, because if the US tried to increase interest rates, it's going to actually also affect the foreign markets. And when you have all this debt in the system that all these countries just can't even pay back to the US or so on and so forth, you know, I mean, it gets to the point where like some of these countries do have, like for example, like you might be a corporation in Taiwan, and you owe the Taiwan central bank or whatever some number of money, but you can't pay your debt to the central bank, um, because it's all dealt in US dollars and you're not getting US dollars. You know, it's like it's kind of a complicated system, but just to put that simply, like there's this whole demand of global US dollars, and it's just there's this global dollar shortage.
Yeah.
And so it's a very complicated system, but this is the exact system that the US that crashed the US in 2008, and it's crashing China right now with Evergrande and all this stuff like
The
um
junk bonds,
but
essentially.
you know, yeah, and then we have all these like fabricated statistics like I was mentioning in the chat with like unemployment versus the U3 versus the U6, the
Yeah,
difference between.
real quick, dude. Comparing like Evergrande to like '08, like '08, real estate crash. We had tons of junk bonds, tons of junk loans. I think that's what they call them, like junk loans, where basically you like loaned a bunch of money to someone and essentially there's like no way they were going to pay that off type deal. Some similarities like with the Evergrande deal is like Evergrande has these like these junk bonds on these real estate properties, and it's like a really expensive one, and the real estate property is like a parking garage on an island in the middle of nowhere. And there's like a bunch of these examples of like really shady real estate properties, and I'm not like educated enough to go any further than that, but that's just like the idea is like they're putting money into things that aren't giving them money back, and they're losing money on them instead, essentially. Um,
Yeah, yeah.
that's the simplistic way. But sorry, Lawrence. I think you're
Oh,
saying
no
that.
worries. Totally, man. No, I totally agree with that. It's like also just the fact that like we have these fabricated statistics that are kind of, you know, hiding the true reality of things because the politicians, they don't want to lose their favor with the voters. That's probably the simplest way we can put it all night because, you know, um and that's what would make it kind of a silent depression, you know, as much as the people want to believe the numbers are good or bad or whatever, we're all going to believe the numbers so long as they fit our narrative. So the moment the numbers don't fit our narrative and what we believe, maybe the right wing or the left wing, whatever we subscribe to, if the numbers don't fit our narrative, then we're going to ignore them. We're going to put our blinders up and we're going to stay in our like kind of our our spheres of on the internet kind of thing, you know. It's kind of crazy. Or if everything at the end of the day everything is conspiracy, you know.
Totally, man. Homie says Robert Kiyosaki was showing his 13 bill from Zimbabwe. Terrifying knowing the extremes of inflation. What do you mean 13 bill from Zimbabwe, homie? Shout out Robert Kiyosaki, rich dad, poor dad. All right, homies. So what do you mean though from Zimbabwe? You got 13 billion from Zimbabwe? But so we're gonna get into the end of the stream, you guys. I'm just gonna go through
Oh, it's a dollar bill that's worth 13 billion.
a dollar bill. Oh, $1 bill is worth 13 billion in Zimbabwe money? No, that'd be
Yeah, you see
nuts.
those bills with a bunch of zeros on them and stuff in like Venezuela or whatever.
Yeah, that's
Yeah, it's
crazy. Yeah,
crazy.
the U.S. dollar is like the world currency. You could look at it honestly, because you can go like to most places and like if they don't take dollars, they'll you can exchange it there, and it's just it's way more stable than a lot of other currencies. That's for sure. But so we're gonna end the stream by going through just some rapid fire stock technical analysis for you guys, just to look at a few hot stocks, see where they're at currently. Now's the time. If you guys have a stock call out, let me know in the chat and I'll be happy to look at it. Lawrence, feel free to make any points. I'm going to try to do this as fastly as possible. If you have a stock you want me to look at, Lawrence, I'll happily do that as well. So real quick,
Good.
just taking a look at the S&P 500. Obviously, we're still in this uptrend, but we are getting some weakness. We're closely going to break out of that potentially. I have to see how the next 2 days go. Obviously, if the next 2 days go good, we see some positive sentiment, we'll probably bounce off this line and continue on the upward trajectory. But on the flip side, if we crash, we still have the 50-day, the what is this, the 100-day? I have to look at it again. Figure out which line's which. I would assume this is the 200-day, 100-day, and 50-day. So we have these supports as well, and then underneath those we have the 426 support. Don't forget, 420 is a solid support for a lot of them retail investors. So let's get into the stocks for today really quick. And these are stocks that I relatively own or am thinking about investing into. And so, Tattooed Chef, a stock we've obviously talked about for a long time. Shout out the homie Jeremy. Just want to point out that Tattooed Chef is currently sitting at $16.12. It did bounce off its crucial support of $15, so it could be on a reversal. You never know. But either way, if you're a long-term investor in this company, you're getting a solid deal right now, buying it at prices as late as last year. It was this price. Obviously, you're not getting it at its like IPO price of $10, but $16 I would say is a solid deal. You can look at like companies like Beyond Meat really quick. This isn't technical analysis, but Beyond Meat is also down very heavily. So another competitor of Tattooed Chef, and you can see how Beyond Meat has had crazy good spikes, you know, throughout its first little spur over the last couple of years. So you never know. Tattooed Chef, just making a little comparisons. I think Tattooed Chef is on the same trajectory that Beyond Meat has been on. Maybe their food is even a little bit healthier. We never know. We'll have to see, but that's a good stock in my opinion at a fairly good deal. EDR, the UFC. I was shouting this stock out all year. This is probably my favorite stock that I've bought all year. It's one of my newest investments over the last year. And Endeavor Group, they own the UFC. You guys pretty much should know that by now. But yeah, they're on an uptrend. That's all there really is to say about it. They're just continuously moving. If they break below this uptrend line, we could see a little bit of a bearish pullback. $30 is a crucial resistance for the stock. We've seen it basically get stuck at $30 for a minute back here. And it's finally starting to retest back up to 30 with a pretty nice looking trend. You can see this was like a short burst and then a downtrend. And you can see that the momentum is starting to pick up, and this is actually starting to look like a real uptrend. If you guys are a UFC fan, you guys saw those fights last Saturday, and man, dude, every single like main pay-per-view event is just so amazing. Like for the UFC fans, you guys, it's like watching a Super Bowl for you football fans. Like we get to see lives change every single time. You know, every time someone wins or loses a belt, everything's on the line, man. And UFC is the fastest growing sport. I'm bullish on the UFC, and we're gonna stay bullish. And also, in regards to the UFC, we got DraftKings, homies. DraftKings, they are getting beat to crap, homies. So again, we had this green line. I told you guys this was my cutoff line. If the stock passed this line, I was gonna sell, and it did. And I'm glad I sold, because obviously it continued to dip even harder, and it's dipping close to all-time lows today currently. So I'm calling it right here, you guys, from 23, 27, easy money play for the long term. And it's a high growth play too, in my opinion. All we need to happen is we need some more states to legalize online sports betting, and there's going to be a crazy momentum uptick for the entire sports betting sector, DraftKings being one of the leaders of that sector. So you could start dollar cost averaging now, but I'm also recommending you could wait to see if it does get closer to like the 23 support. But right now, man, like another one of my favorite stocks, just because I believe the sector has so much growth. This crucial support will definitely tell us where the stock is headed. If it goes below that, man, stock could be in trouble. But I don't think it is, because they have a lot of good things going for them, you guys. So you're getting the stock at a deal steal right now. You're getting it at the same price it was last July, not this July, but July back in 2020. So pretty solid deal in my opinion. Don't sleep on DraftKings. Going through this as quickly as I can. We got Disney. Disney's also another stock. We talked about it earlier. It's like one of my favorite stocks to look at in regards to the travel and that sort of thing. They're also a metaverse play. Disney is hitting a support of around 142. And it's starting to recover, but it's having a little bit trouble today. This one could already be in recovery mode. I think this is already a steal deal from 140 to 150 at the stock price. So if you guys don't have any Disney yet, definitely consider averaging into that one in your long-term portfolios, homies. Moving along, let's go to Robinhood. This is a stock that, honestly, I think Robinhood has a lot of potential still, you guys. Like, Robinhood has that shady appeal type of deal with, you know, a lot of pissing off a lot of retail investors. Like, I think that's the most negative thing about it. But at the end of the day, I think Robinhood's one of the OGs. Robinhood, if he is the one that started free commission trading, right? And everyone copied them. Everyone that's in the same market as Robinhood copies what Robinhood does. And Robinhood copies other people too for certain things. But there's certain aspects of Robinhood that makes it appealing to the majority of retail investors, you know, with its user interface and that sort of thing. And as it continues to drop below its IPO price and get to lower and lower levels where it's under $20 a share right now, keep in mind it IPO'd at, I believe, 33. It's almost half off its original IPO price, you guys. So I'm just pointing that out. Obviously, it's another one of those stocks that you got to do some research work into understanding it fully. But I have a good feeling about this one, and I think if you continue to buy underneath its initial IPO price, you'll get a good long-term return out of Robinhood. So let's keep it going. Just a funny honorable mention. We got Jack in the Box. Ticker symbol Jack. This one is down pretty hefty. Technical analysis, let's draw like one support for it. So it's actually currently at a really crucial support. See. But the big deal with Jack in the Box, while I'm bringing it up for you guys, you can see the stock's falling. Let's actually pull up the other stock now. Taco, which is Del Taco. That's funny. Where the heck's the up day? Well, that ain't good. Look at that big green volume candle. This doesn't make any sense on the chart. Hold on, let's pull up it on Robinhood really quick. Taco. So Jack in the Box acquired Del Taco. Basically, here's the jump I'm trying to show, but it's not showing on TradingView for some reason. So Del Taco went up. They were down $7, and now they're up to $12.50 because Jack in the Box bottomed out. So just an honorable mention. I'm definitely not thinking about hopping into these ones, but maybe Jack in the Box. I mean, if you guys like fast food, and does Jack in the Box pay a dividend, Lawrence? Do you know? Probably. Let me see here. They don't pay a dividend. I don't know.
What's the D?
They got 2.2 dividend. That's solid. Let's compare it to McDonald's really quick. McDonald's has 1.98 dividend. So McDonald's over the last year is up 24%. Jack over the last year is down 13.25%. Jack in the Box could be at a discount if you're comparing it to something like McDonald's. It even has a better dividend yield than McDonald's. But gotta look into the fundamental balance sheet of this company. Maybe I'll do that on another stream for you guys, but I want to keep this going quick. Jack in the Box, honorable mention for you guys. Moving along, let's get into MJ really quick. And this is the ETF for the cannabis sector. And MJ is getting close to like the bottom levels, you guys. For anyone investing in those cannabis stocks, you guys have been feeling the pain. I know it. I still have some weed maps, and I'm holding through the pain, you guys. That's just what you gotta do when you believe in a stock. You gotta hold through the pain. But we gotta figure out when that pain's gonna end, right? So there is a support at $10 to $9 for MJ, the ETF covering the cannabis sector. And we'll just have to see if we get lower. That will hopefully be the bottom. But if we start to recover sooner, that is always a possibility as well. But MJ, you guys are trying to have a vast, coverage on that market instead of just one individual speculative stock. Definitely get into MJ. I also want to cover for you guys a couple other ETFs. CIBR. This is an ETF that I really want to get into. I've been wanting to get into this ETF forever. But as you can see, they just keep going up. They just keep going up. But look at this. Finally a drop below the 100-day moving average, and it looks like they're actually almost getting close to the 200-day. So this tells me finally somewhat of a discount in this stock. Pull it up on Robinhood so you guys get a better little visual. Cyber mainly focuses on cybersecurity. So they have like a bundle of all the different cybersecurity stocks in there. And I think cybersecurity is another one of those sectors that is just going to be, it's going to be really important moving into the future, you guys. Every big company needs cybersecurity. Everyone's going to need it because there's going to be so many more types of cyber attacks moving into the future. Imagine when we're in the metaverse, how many cyber attacks can happen there. Cybersecurity is going to be really important, and I don't want to miss out on the sector. I don't feel confident investing in an individual stock in that sector. So this to me is the best alternative. And still, it's up 0.4 for the last 3 months.
What's the expense ratio on that?
Expense ratio. Does it have it on Robinhood?
Yeah, all ETFs have expense ratios, so it's always kind of nice to know those things.
0.6.
0.6. Cool. Yeah. Or 0.9. Oh,
0.6.
0.6. Okay, cool. Yeah, that's not bad, man. Dang.
And actually, I didn't know this, but now Robinhood has the top 10 holdings right here for you guys, so that's pretty cool. All right, Robinhood, updating your user interface. That's right. Okay, and then so Cyber's a good one, you guys. They're down almost on the last 3 months. Finally, hopefully you can get a deal on this stock. If it goes under $50, I might have to buy. All right, keeping it going. This is a new ETF, and this is an ETF for NFTs. It's called NFTZ. And honestly, I heard about it and I just looked it up, and look at it. It is getting crushed. Went from 24.20 and now it's at 19. But look at its top holdings, you guys. They got Playboy, they got Cloudflare, they got Marathon Digital, they got Coinbase, Bitfarms, which I don't know what that is, and I don't know what Hut 8 Mining is, or Hive Blockchain Technologies, but it's relatively all for crypto and for NFTs specifically. I also saw that eBay is one of their biggest positions, but it's funny, bro. Playboy, like Playboy magazine, it's one of their top holdings, and it's for NFTs. So what does that mean? Playboy getting into the NFT space? Pretty interesting stuff. I'm not too sure if I'm, going to invest into this ETF, but it does make me want to look at Playboy a little bit and see what's up with this stock. Currently down 1% for the month, but it's still up big for the last 3 months. Stock for the year's up huge, and over the last 5 years, looks like they actually IPO'd recently. Oh yeah, I forgot. This company IPO'd last year. Wow, they were at $10.
Why are we looking at this one?
Because it was one of the top holdings in the NFT stock I just showed you guys, NFT ETF, which
Really?
yeah,
Oh, because Playboy's trying to do NFTs. Okay.
yeah, I guess, and they're trying to do it so
Interesting.
large that it's one of the top plays in an ETF NFT stock.
Yeah. Because I'm
Pretty.
always trying to think like, who do I want to support with my money in terms of investments? I want to support people that I actually like
Oh yeah.
want to see succeed. I don't know if like Playboy's cool, I guess, but like I don't know if that's promoting the. I don't know. Everybody has different beliefs about that stuff, but I wouldn't.
Oh
I
yeah.
don't know.
I'm
Yeah.
not. I just think it's interesting that Playboy for this NFT stock it's one of its top holdings. So I just want to look into Playboy for what are they doing in the NFT space. I'm looking at them right now though, and they don't look like they're they look a little overvalued. So yeah, and always invest in what you know. Invest in what you like. That's another reason I don't really like my money in the pharmaceutical stocks, because it's like, it's rather have my money be made in other ways than off of that. But let's keep it going. We got just a couple more stocks for you guys. Taking a quick look at Wynn Resorts, another travel related stock. They've had a nice bounce off their $77 support, and today was red obviously for pretty much all the stocks, but hopefully this is the bottom for Wynn, but we will have to see. Just so you guys can see a crucial support, I think Wynn under $100. If you buy it under $100 and basically hold it until it goes over 100, it has done this pattern over like the last like look at this. Hold on really quick. Kind of hard to see, but basically you can see how it goes up and down crazy, right, over the last decade or whatever. And essentially, if you buy Wynn under $100 and just hold it till it goes to 100, it typically, or not typically, it has worked out pretty much every time. Doesn't mean it's going to work for sure 100% in the future, but just saying, $84 a share, not too bad of a deal. Worst thing that could happen is if COVID sends us into a lockdown, and that's a big worst thing, but hopefully it's unlikely. So last stock for you guys. Last stock is gonna be Tesla. Tesla, my Tesla. Gotta zoom in on this bad boy. Sorry, one sec. All right, so Tesla. Let's just erase that. So Tesla did break under its 50-day moving average, and it's starting to head downward. Elon Musk.
That support you had there that you just deleted too.
Well, that was just, it was just a crooked. Yeah, we can redraw it. It was just crooked. Yep. So it broke this little support of $1,000, which is actually a very crucial support because $1,000 is a psychological number for a lot of people. So it gapped pretty heavily, dropped like $50 underneath that, sitting around 950 right now, and or 960. And yeah, not really too much to say about Tesla. There's a ton of different support regions for the stock. We can just focus mainly on the 50-day right now, and then the 100-day, and the 200-day being the indication. If we go under this, we might be switching into a bearish trend. So just keep that in mind. But for us to get there, we'll have to see Tesla go under about $800, back down to 760. I think if Tesla gets down to those numbers, it starting to get some people ready to buy. In my opinion, there's going to always be some strong buyers for those Tesla drops. So keep that in mind. But that's about it. Any other thoughts, Lawrence? Any stocks you want us to take a look at before we head out, homie?
I don't know, like let me see.
Oh, let's just take a look at Bitcoin and Ethereum real quick, and then we'll head
Yeah,
out.
we can look at cryptos. Why not?
All right, let's take a quick look at Bitcoin. And Bitcoin's been getting hammered on pretty hard. And just so you guys know, we'll have our Friday crypto streams back. Not this Friday, but the next Friday with Chillium Slat. So stay on the lookout for that. So Bitcoin went all the way up to around 67, and it pulled back down. Right now we're sitting at about 40. What is it? We're at 47. So we're sitting right on the 200-day moving average right now. Uh-oh. That's a little concerning, right? So I would just say we're going to be looking at this. If we can remain the support and bounce off of it, that will be good. If we go below the 200-day, there could be a quick recovery as well, but there also could be another downward spiral from crossing that 200-day. We'll have to see. Lawrence, do you have any thoughts on this crossing at the 200-day?
No, I mean, I have heard though too that, like we talked about this on like I think two streams ago, like about how there's like that 40K support area. Um, but yeah, no, I don't know, it's really hard. I've honestly been kind of expecting further downside, but you can draw like a trend line from the peak of at 67K, or I mean 68K up at the very top. Yeah,
68K.
that would be the 40, that would be the 40,000 support, but yeah, you can draw a line from up there. No, 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 the other way, downtrend, downtrend. So that way, yeah. So that would be our down, that's our established downtrend. And you would want to see us break above that before we really started like making like more, we would, before we would really start trying to make, yeah, and then yeah, there you go. We have like a downward channel right there basically that we're inside of. So arguably, as long as we're in that channel, we'll continue to go down until we either even worse break to the downside of that, or more more hopefully break to the upside of that channel. We want to see a break to the upside before
Mm,
like feeling like we're looking for a buy, because you could be buying. I mean, unless you're going long and then you're dollar cost averaging all throughout the downward trend, which is not a bad idea, but be sure that you're like, allocating your risk accordingly. But if you're,
I
looking to
think
buy more, uh-huh.
yeah, I think you're right, dude. It's looking like potentially downtrend. And you're saying the 40K support. That definitely makes sense. Also another psychological number. Um, I am gonna just make like a prediction. Obviously, this is a short-term prediction. Anything can happen. I think Lawrence could be right with this 40K support. I think we could see like a big red day tomorrow potentially for crypto. Maybe not tomorrow, but in the next few days coming. If we drop below this 46 200-day moving average, could see a nice drop to maybe 40, 41. But I think that's going to be one of those like impulse drops, like maybe we saw with this red candle right here, dropping all the way to 40, 42, and then recovering in the same day. I think we'll
Could even
see
look at
something like
the
that.
weekly if you wanna go to the weekly real quick and see what that looks like, because the weekly is kind of a larger time frame, it's a little bit easier on the eyes in terms of, like, so much is going on in the dailies, it's like, for us long-term investors, we wanna think more bigger picture, right? And then also, Kurt, if you wanted to, I know you do have your indicators at the bottom, but if you want, you can double click the white part of your chart. If you double click any white part of the chart, there's anywhere no, 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 wrong one. Yeah, there. Yeah, and then now you have your indicators gone, you can always double click again to make them go away if you want more
Okay.
space on
Yeah.
your
So,
screen.
but yeah, man. So Bitcoin, it's definitely we're just gonna have to look for these supports, and I want to move along with those. Or anything else, Lawrence? Go to Ethereum.
Yeah, no, I think like the best message for anybody who's like looking to be an investor in crypto, not really a trader, is to just dollar cost average, maybe with some
Definitely.
type of plan of like $20 a week where you put like $10 on Bitcoin and $10 on Ethereum because those are the two best cryptos. Those are like the main ones. Or you do like 25 and 25 or I mean like yeah, 10 and 10 so
Just
or
dollar cost averaging into Bitcoin and
yeah,
Ethereum is what
100 bucks
pretty
a month
much
on.
any of you guys that aren't in cryptos, that's what you should be doing. Don't like the odds of basically making a 10,000% return in an altcoin, which is like is 1 in 50, right? 1 in 50 is your chances of buying like something like Doge and it going up 10,000% and you selling and making that profit. But on the flip side, 60% of people actually lose their entire investment in a lot of these altcoins. So there's got to understand those two different risks right there when you invest into sketchy things. Because 70% of the gains in the crypto market over the last like decade or whatever amount of, maybe less than a decade since Bitcoin's been around, it's all from Bitcoin and Ethereum. 70% of the gains. And people talk about, these crazy percent gains in Doge and all that stuff, but they don't minus the losses from everyone else that's been associated with it. And they don't think of like the crash in 2017 that wiped out majority of the altcoins, or the crash before that then wiped out the other altcoins before them. So yeah, Bitcoin and Ethereum for the long term, dollar cost average into it. Only invest what you're willing to lose. Just to finally wrap it up, you guys. Ethereum is a little bit different looking than Bitcoin. It's actually closer to it's actually on its 100-day moving average rather than Bitcoin, which is on its 200-day moving average. So if that's an indicator, Ethereum is a little bit more bullish, but it's also in a downtrend, it appears, just like Bitcoin is currently. So we'll have to see where Bitcoin and Ethereum both find support. And like we said, so Bitcoin's 200 days around 32. Looks like we have a crucial support for Ethereum at 30K. Bitcoin, we are not 30K, I'm sorry, 3K. And then Bitcoin, we have it at the 40K. So we'll just have to see where these dips happen. But keep in mind, I do think we're gonna see like a buying opportunity day like this kind of soon, like you're seeing right here with whoops, like with this big red candle, right? The candle ended the day at 41, but at one point during the day, Ethereum was 33. So there are going to be buying opportunities, but I feel like you have to make those moves pretty quick. So just be on the ball. If you got some cash on the side, you aren't in crypto, you see a hefty drop, boom, make a nice little dollar cost average buy. Then you see another drop, make another dollar cost average buy, and that's about it though. But
Yeah, I think I agree with that because, we don't want to encourage people to lose money. We want people to gain money, and the safest way to do that in the long term, especially if you're not savvy with looking at the charts and doing technical analysis and all this jazz, just the safest way to do it is to pick like a budget, make a budget, pick how much money you're truly willing to put in that you're okay with losing in the long term, and you allocate that between Bitcoin and Ethereum, and then even then, yeah, it's like stop, don't try not to try to avoid if I can, because I see this all the time with people like that are like, I want to make like a big bucks in altcoins because altcoins move way crazier compared to Bitcoin, but then now because it moves way crazy to the upside, you're just as much risking that craziness to the downside. So you
Yeah,
always want to be aware of your risk going into these things.
yeah, like I said, it's I looked up the odds. It's 1 in 50. You'll make 10,000 plus return on an altcoin, and then 60% of people though lose money on altcoins. Um,
It's funny because I'm almost even willing to bet it's probably worse than that, like
yeah,
when
yeah, totally. I think there's no way to quantify that exact number, but that's just what people throwing out there for the public. But anyways, Yolo said, you guys see that video of the Chinese whales dumping their crypto and they were counting it down like a space launch and then it plummeted hard? I did not see that, man. If you could link that into our Discord, I'd love to watch that. That sounds pretty funny. Um, but yeah, thanks so much for tuning in, you guys. If you guys missed some of the show, you can always go catch the repeat at the very beginning in our Twitch channel, and I will upload this to YouTube as well. So, hope everyone has a great rest of your week. We'll see you guys on Wednesday's stream. Until then, stay safe, homies, and check out the Fed report. See you guys in the Discord. Peace, homies.
peace.